All right, Bob, welcome to the Resource Insider podcast today. Thank you very much for taking the time.
Great to be here. Thank you.
So, we've been trying to schedule this podcast for, I think, 3 months now, and you've been traveling. I've been traveling. I think we had two other attempts before getting this one done, and it looks like you are squeezing us in here. I see an industrial sprinkler in the background. So, where are you recording this from? It doesn't look like it's your living room.
No, it's not. I'm currently down at the Rural Symposium in Boca Raton. I've been coming down here for a few years now with Dakota Resources. So down here with Rick and a very full, very engaging conference.
That's actually an interesting way to start this conversation. Because I'll start this conversation by telling you a story. So the first time I'd heard your name was actually from Rick Rule. So I moved to Vancouver in 2015, and I'd had a technical career prior to that, and I wanted to build a business career. And I set about on a very aggressive harassment campaign on email of contacting anyone that looked like they knew what they were doing and who would
Right.
talk to me. And Rick was one of those people. And I went to his office and I kind of said, um, how do I succeed in mining? What do I need to know? Very basic questions. And I think Rick fields a lot of these things and has had some experience in that. And what he said to me actually is the most important thing you can do if you want to succeed as an executive or an investor or any sort of leadership role in the mining industry is to build a constituency of investors and followers and supporters that follow your work and are willing to put their sort of money and reputation behind you. And he referenced yourself and what you were doing at Pretium, I believe, at the time,
Right.
as a key example of that. And he said, Bob Quartermain is someone that he believed better than almost anyone had built a constituency, that's the word he used, of followers and
Right.
supporters that were kind of willing to back you in your work. And I have thought about that ever since. I kind of went home and I read a little bit about Pretium and your career at that point, and this was about 10 years ago, like 10 years ago, almost to the day, probably. And now I finally get to ask you that question. So I might even start this conversation with that question and kind of broadly, is that something you actively think about when building companies, leading companies, or in your career of building that constituency of supporters? And if so, how do you think about that? And what kind of role has that played in the success you've had and what you're currently trying to build?
Right. And if you look at it from the Rick Rule school that I learned at, is that all shareholders are owners of the business. And so if you realize whether a shareholder owns 1,000 shares or 1,000,000 shares, he is a vested interest. And when Rick started to help finance me in Silver Standard, we did our first financing back in 1993. It was 3 million shares at 78 cents. We raised $2 million. And we went off to look for silver projects because Rick and Jim Blanchard at the time wanted to use a vehicle, and Silver Standard had the right name. And of course, we grew that from 2 million to 2 billion. It was that simple. It was branding. Silver
So did
Standard.
you have any assets at that point? So this was just conceptually, or
No,
did you
no,
have
we
sort of placeholder assets maybe?
yeah. Well, I took over Silver Standard in 1985. It was then a company within the Tech fold, and I'd been working at Tech. I had worked at the Lamaque gold mine, so I had underground experience working 6,000 feet below surface. Worked at the David Bell mine for 3 years. Started as an exploration, saw it all the way through till it was put in production. So I kind of knew what mines look like. So in Silver Standard, we have been looking at projects. Rick approached me, and I said, "That's great." So we pivoted and we turned. Now, at that time, silver wasn't well regarded. There was a very specific cohort in the United States and in Canada who were silver bulls because of what had happened with the silver project or silver price
Yes.
before. So we decided to go out. We did this financing. And then it became, how do you engage with shareholders? And so there was some newsletter writers that picked us up. But when I would go on our project visits or site visits to go see what we were doing geologically wise, I would fly through Dallas or through Chicago because that was where the flights would then head down, or perhaps Miami would go down to Bolivia or Chile where we were working. And I would always have to overnight. So what we started doing is, and you may recall this in the before the internet days, we had the Noble list, which is all your shareholders were
Yeah.
held by your investment funds or groups, but we couldn't get access to the data. So we would merely send an invite out and say, Bob Quartermain is going to be at the airport hotel at the Dallas airport at 6:30 on this night with coffees and cookies, and he'll be there for 2 hours if you want to come and talk about silver and silver standard. So we'd send it out, and we would do it within a 200-mile radius of on the interstate of that hotel. So the first time we
So you
go,
could target
20
the
people would.
emails to the people that lived in that region. Yeah, yeah, okay.
We
You had
took
the
we took the
addresses.
zip
Yeah, yeah.
codes. We were able to take the zip codes, send the zip codes out. 20 people would show up, and we would have this almost revivalist. We would talk about silver. We would talk about our projects, and I would do that, kind of once a year. And I would do it in Chicago. I did it in Boston. And what happened over 1 or 2 years is the first meeting was maybe 20 in Dallas, as I recall. By the third or fourth time, 100 people would show up.
Hmm.
And so you built this constituency of individuals, and of course they would talk to their friends. And so we built up a very large retail shareholder base in the United States, which meant, and they all did well in Silver Standard because this was back in the mid early 90s, and they saw the share price go up. So having built that constituency, when I started Pretium, they had already made money. We started again. Rick would go out and help promote, speak about what it was doing, and I would do the same. I would go to individuals and I would see portfolio managers of the large funds, but then we would always reach out to individual shareholders because those individual shareholders, particularly in the United States, are long-term shareholders. They're invested in your business. And so
Yeah.
we've been able to translate shareholders at this conference who were with me at Silver Standard in Pretium, and now they're at Dakota Gold. I was just speaking to a shareholder before I came up here who has been involved in all three and long term, and he tells his friends. And so that constituency is important because when share prices move up or get volatile, when let's say the larger portfolio managers are selling, you have the longer term private individual shareholder who's there to help support and invest in your company and be a long-term partner with you. And so you look at it that way. These shareholders are partners who've been following me since 93. So 30 years they've been investing, and we've been able to collectively enjoy appreciation in the share price.
Where did that idea come from initially, right? Like, there's a lot of mining executives that fly through Dallas or Houston or Denver or what have you. Most of them don't do that. What made you think, I'm going to be in Dallas anyways. Let's see who shows up and wants to talk about Silver Standard.
Well, because we knew our retail shareholders were interested from some of the work at attending, like the New Orleans conference at the time with Jim
Hmm.
Blanchard. New shareholders were there, and they were very loyal. And I just at the time, Paul LaFontaine at Silver Standard was running all right. I said, Paul, let's try it. Let's. How do I get to reach out to shareholders? And it's like, let's look at the zip code. And some people drove an hour to an hour and a half to just come to that meeting. We didn't give them dinner because we do is cookies, but it showed their dedication, and so that model worked. And I followed that for a number of years, being able to reach out to them. And we eventually went when shareholder Silver Standard was maybe 75 or 80% retail shareholders to ultimately, as we got larger, develop the Manantial Espejo project and Burkitas project, we had much more institutional shareholders coming in.
Yeah. I think a lot of mining executives don't always appreciate how important that core retail individual and sort of maybe high-ish net worth individual is to launching and sustaining these companies through, what can be the ups and downs of this cycle. And
Right.
I mean, I appreciate that you clearly got that very early on, and it really mimics a lot of my experience running Resource Insider, of course, a retail-focused newsletter. But
Right.
we've managed to do so many private financings and have held those sometimes for a year or two at a time, uh, largely with U.S. focused private shareholders who really kind of believe in the business and the long term view of this, which is, I don't mean to talk poorly about my own country, but it's harder to do in Canada, where the Canadian shareholder is perhaps overserviced by junior mining companies and has a much shorter term mentality on average, I would say.
Right, and I would ascribe to that thesis as well, and that's what I've found again here. Like I say, the reason why do I come to this conference by myself? I arrive, I set the booth up, I'm able to do it, I man the table, go to some talks. But there were many people who were here last year, liked what we talked about, told them what we were going to do over the year. We're going to have a resource update. We were going to do an initial assessment with cash flow with Dakota Gold, and they bought last year at $2 and change, and the share price is in $4 range. So they're happy. What are you doing next? Here's our timeline next. Great. Will you be here next year? Yes, I will. Look forward to speaking with you. And we tell our friends, and we're able to do it. And so there's real power, as you say, with your newsletter, which can pick up, or these individuals, because many of them, are talking to their friends and relatives. And the reason we had a major announcement out on Tuesday, I knew I was coming down, and it gave me something to speak about. And now tomorrow I'll be on stage speaking with Rick. There's many hundreds of
Yeah.
people here and many more hundreds online. And so you're able to get all those touch points of individuals who, as you know, in this business, if tell people what you're going to do, remind them of what you've done, then do it, and then remind them of what you said you were going to do and the fact you've done it. And it's about building that credibility, which has happened at Silver Standard, happened at Pretium, and now at Dakota Gold.
You mentioned having shareholders that have been supportive of what you've done for, three different companies now over 30 years. What are you seeing in terms of new younger investors coming in? Do you see many 30-year-olds or at these conferences yet? Has that something that started to happen? Are you seeing them, or is it more the call it 50 to 70-year range of these people who have been investing in mining and supporting this industry for decades now?
Yes, it would be to your latter point. There
Yeah.
are younger individuals coming through, and it's great about Rick because he does his boot camp, so he helps to
Yeah.
educate people, which is important. It's about educating them because too easy, the younger cohort that I'm familiar with, they buy bitcoins, or they're now looking at the tokenization of gold and how do
Yeah.
you buy. I'm old fashioned. I was talking to one today. It's like I'd rather have my physical bars because if the electricity ever goes off, I have my gold bar.
Yeah.
Electricity goes off. How do you manage your tokenism with your coin? And not to say that that's wrong. It's a different way to look at, but that's how that generation is looking. And therefore, for them to come to this conference where you're dealing with, physical companies and people dealing with it, I think they're perhaps one step removed from that. And we are seeing some younger cohort come in, but to your point, it's largely my peer group that I've been seeing for the last 30 years who are still here investing. But it's a powerful large group, right? I mean, the fact that Rick has many hundreds of people here attending, I know many hundreds online, and
Yeah.
these are all high net worth individuals who can take positions, and that's the cohort you want to be in front of.
Well, you did something else unique when launching Dakota that I wanted to ask you about is I believe you listed directly into the United States when you launched the company, right? So you're
Right.
going to the kind of the home of your core shareholder base, right? You're bypassing the standard route on the venture or some other Canadian exchange and going to the United States right away. How has that experience been for you? I'm kind of scratching my own itch on this one. I'm not sure if this will be interesting to other people, but I think it should be because my personal theory is that the future of mining and junior mining is going to move to the United States and start. And it doesn't give me any pleasure to say this as a Canadian, but bypassing the Canadian junior mining ecosystem. I discussed this with Rick last year and he disagrees with me, but I think a company like Dakota is a good canary in the coal mine, if I might push the pun a little hard, to what might be happening. How has that been? What's your thought on that?
Right. I mean, we were very strategic about it, and John Nod and I,
Yeah.
when we're involved in the company, we set it up and made this for one reason that I had a lot of individuals who have been invested with me in the past who lived in the United States. Two, our main asset is in South Dakota,
Yeah.
so we're in the old home state district. So we have an American company, a Delaware company, based in South Dakota, appealing to the U.S. Gold and silver bug because we have a little bit of silver within, or I should say, the gold and silver investor. And so that was an easy choice for us to make. but it does require more capital. Functioning down in the US markets require a certain level of sophistication, which you need to have. Now, to your point, I
Hmm.
started out with Silver Standard was on the venture. We moved to the TSX and ultimately moved to NASDAQ as SR Mining. The same when we did Pretium, started out on the TSX and then graduated down to down to the New York Stock Exchange. And so I think partway between what you've talked about and Rick does, if you want to access that early risk capital, the Vancouver market, when you think, is designed for that. And when you
Yes.
think about Vancouver, it now probably has the most billion-dollar or multi-billion-dollar mining companies in the world, right? When you start thinking about Wheaton Precious Metals, the world's kind of second largest gold by market cap. You have B2 Gold, you have Pan American Silver. It goes on. You still have tech based there. So when you think about Vancouver over Toronto, other than perhaps Agnico, there's a lot of bandwidth, and the ecosystem is designed in Vancouver for risk capital. The
Yeah.
legals are quicker, the financials are done. As soon as you move south of the border, you don't have that same understanding. So I think there'll be this area where the junior companies who need to be raising hundreds of thousands and a few millions of dollars probably can do it easier best in Vancouver with a
Mm.
supportive ecosystem. Because I get calls all the time. Hey, Bob, we're doing a financing. Yeah, I'll put in 50,000. I'll put in 100. You don't have that access because everyone in Vancouver talks among themselves, as you well know.
Yes.
And but then once you start to graduate where you need a little more sophisticated capital, then look at that transition down to the NYC, Amex, as we've been able to get on, because then you can get into the much larger capital pools, which exist here in the United States than we have in Canada, right? So I think initial setup, and then as you advance your opportunity, then you can look into the more senior capital markets.
But Dakota was never listed in Canada, as I understand it.
No,
So you were
that's right.
able to bypass that. And do you think that's just a matter that you had a track record, you'd had past successes, you had that shareholder base? Probably, I'm speculating you could raise some of the money privately and didn't have to go through the exchange process here. Am I
That's right.
summarizing that well? Yeah.
You are summarizing. We were able to, both for existing shareholders, you may know Marion Katusa and his followers are large shareholders
Yeah.
as a group within us, and we're able to utilize that shareholder base privately before we went public. And that really allowed us to have the money to develop the asset we have. And then, as you say, then go and list directly. And what that does is a US registered company, it gives you more opportunity with some of the funds out here, like in some of the index funds, like the Russell 3000, where if
Hmm.
you have a dual listing, you can't get on, but if you're an American company, you're able to. So again, there were some strategic thoughts that John and I had moving south of the border, both because of his experience with Gold Standard Ventures and mine with Pretium. We had a cohort in the United States who knew where we were and were able to make that transition relatively seamlessly.
Okay, that's good. It's maybe a bit of a detour of our normal conversation, but it's fascinating, and I think it's certainly something I, as an investor, am thinking about. There's been such a dearth of volume for any mining stocks on the Canadian exchanges over the last
Right.
couple of years. We're obviously seeing a correction occur right now to a degree, but like
Yes.
still nothing compared to say 2008 or 2007 or those times. And I
Right.
I mean, I wonder will come back or it will sort of transition. I don't know. I don't know.
Yeah.
So
And
these
it
sort of
was
conversations
interesting.
are interesting to hear your experience on the receiving end of that as a listed company. Yeah.
Yeah, and that's I have the bandwidth. I've been doing this for 40 years now. I
Hmm.
started running Silver Standard in 1985, and we would trade maybe 25,000 shares a day if we were lucky. Often it was 25,000 shares a week, right, on the venture exchange. But where you get attention is liquidity, and that's what this whole process of working with Rick, but more importantly, getting out to individual shareholders because they start to trade and that creates that liquidity. And that's what's important. And you're right. Now, when you look at Dakota Gold, we're trading hundreds of thousands of shares a day. It allows more people to be able to participate because there's liquidity there for some of these investment funds who can come in and buy a few million shares and position themselves. And so having that knowledge and experience is certainly good because that's one of the priorities for a CEO of a company. And if you haven't been involved and just start taking over a public company and think, oh, there's a trade going on, a trade is a buyer and a seller. and then maybe two people that you know or have known. And
Yeah.
one individual is determined, I've made some money on it, I'm looking to get out. Another's looking and saying, gee, Dakota Gold's just come up with this interesting financial assessment of its cash flows. Now's the time to meet a position because of my risk tolerance. And so you really need to understand the fact that the market and people who trade your stock are real individuals, and you have to be able to connect with them. And that's what you can do here in these conferences, and I'm able to do that personally.
Okay. Well, I want to talk a lot more about Dakota Gold, but I do want to take a bit of a step back and talk about your time at Silver Standard. Obviously, that was a big chunk of your career. Was it, you left in 2010. When did you start? Was it 93, I think you said earlier, or 85?
In 1985 at Silver Standard.
1985. Okay, sorry. So 85 to 2010. And you know what I love about the Silver Standard story, which is so antithetical to the average Canadian sort of junior mining company, is you went from small, tiny explorer to an actual producer with multiple assets under management.
Right.
And I would love at a very high level to kind of talk about how that happened because it is not unheard of, but rare in Canada, maybe a little more common in Australia, I find, where they are focused more on production. Did you go into that looking for we're gonna find a mine and build it and operate it, or was that something that evolved over time given the assets you'd gotten exposure to?
Yeah, it's the latter. It came as a part of an evolution. Um, as you know, my early career was involved with tech, working with them. Prior to them,
Hmm.
I started as a bush geologist back in the late '70s, working in the Northwest Territories of Canada. And I would go up in a bush camp, be dropped off at Baker Lake, and live for 4 months in a tent. And did
Hmm.
a lot of prospecting, a lot of mapping. Back then, we were looking at gold and uranium. I decided to get my master's, went back to Queens, got my master's in what was mineral exploration, mineral economics. And so from that, I understood that you can be a geologist, which can seem like a hobby, but if you're going to be an economic geologist, you've got to ensure that if you find mineralization, that you can recover and make profit at it.
Yeah.
And so, therefore, in my time at Hemlo, and the time in tech was very good. I went to tech and said, listen, if I'm going to be a constructive exploration geologist for you, I should know what a mine looks like. So they sent me to Lamac. So I worked underground at Lamac as a mine geologist
Hmm.
at the 6,000 foot peak. And Lamac is a high grade, nuggety 6 gram mine. Did that for a better part of a year. And then they
Is
transferred
it
that.
in the Hemlo camp? Do I have that right?
Lamac is in the Val-d'Or camp
In the Val d'Or camp. Okay, so northern in Quebec. Okay.
in Quebec, right? And then after, so je parle un petit français. And so I got transferred from there to Hemlo. And the discovery hole at Hemlo, I believe, was hole 76. I arrived at hole 92. Tech did a deal with Murray Pesum. And I spent the next 3 years of my life drilling off the David Bell deposit and actually was mapping the first levels as they were developing it before it was put in production. And so I had that experience and was used to capital markets a little bit because of all of the activity going on within the Pesum ecosystem at Hemlo in those days. It was just great.
Yeah.
Share prices moving around. My first investment was in Golden Giant, Goliath Gold Mines, Frank Lang and Dick Hughes Company, bought it at 50 cents, sold it at $75, thought, wow, this is a great business to be in. But it's you
Easy.
discovered a mine, right?
Yeah.
So therefore you're like, I like this side of the business. So my boss at the time, John May,
So
came and
you personally bought it at 50 cents and sold it at $75. And how old were
I
you at that time?
I would have been 20 uh 27, 28 was the first stock I ever bought. First
And
stock.
this is in the 80s. Oh, that's not a bad first
That's
that's not a
that's
bad first
1982.
stock.
No, it was great. It,
Yeah.
it, it set me up for what I'm doing later on because I never
So
had to
even
have
if
a
you put
mortgage.
$500 in, that's a pretty good return in the 80s and maybe you
I
did
put
more
in
than
I
that.
put I put in $2,000. You can do the math. I
Yeah,
proceeded to
yeah.
lose a chunk of it, but I had enough cash that when I moved to Vancouver, I could buy a condo. And
Hmm.
the great thing about real estate, if you can avoid not renting and can
So in
own,
Vancouver, that's what, $5 million? Is that what you bought the condo for? No. Different time in the 80s
no,
though.
a
Yeah.
different time in 80,
Yeah.
it was less than 100,000. Anyways,
Yeah.
the point is I got to love this industry, this
Yeah,
aspect of
yeah.
discovery that went on in the Hemlo camp. And then I was asked to come and run Silver Standard. It had been a
So
long
who
term.
asked you? That's a good point. You were asked to run it. So who asked you? Was it a board of directors? Was it shareholders? Who recruited you?
My boss at the time, John May, who
Hmm.
worked for the Keevil. So Tech was the largest shareholder in Silver Standard. It owned about
Okay.
39% of the company. So when Tech moved from Ontario out to Vancouver back in the 1972 and 73 to look after their, Highmont, Afton, their investments, they took a large investment in Silver Standard because it had all kinds of projects in British Columbia. It had the Shaft Creek project. It had the Red Chris project. It had,
Oh, really?
yeah, and it had also some other copper assets, and so they invested in them at the time, and those are assets we eventually spun off into Western Copper Holdings, which became Western Silver, and a variety of things. So that's another part of a story. But
Yeah.
uh, I was asked to come out and run Silver Standard at that time. It had been rolled back. It had 9 million shares out. It had been rolled back to 1.8 million shares. And we did a rights offering with Continental Carlyle Douglas, raised $700,000. And I'd never read a balance sheet. I'd never been a lawyer. And Tech said, "You're a good geologist. You seem to have an understanding of geology. You know what a mine looks like, and you can speak publicly. So give it a try. And we're here to support you." And Tech was the greatest supporter. They gave me resources. And so I took over. Silver Standard had this 1.8 million market cap at the time. And we started looking at projects. And then in 93, initially in 85, when I came on, Ross Beatty was on my board. He was dealing with Beatty Geological at the time. And so
Yeah.
Ross and I have been friends for over 40 years now. And, in 93, Ross and I came up with the idea. Ross said, "I'm going to go off and look for silver projects that are mines." And I said, "Well, I'm going to look for silver opportunities which aren't." And Rick's attitude and Jim Blanchard's was, "Let's go buy resources in the ground. We'll pay 5 cents an ounce and build up this huge inventory." And that's what we did. Over the course, starting in 93, we started buying silver resources, the Mudgee project in Australia, the Shafter project. We did some of our own work, Manantila Espejo. We bought it, the Perquitas mine. We basically paid 5 to 10 cents an ounce as a call option. And Rick was great because he did the first financing at 78 cents. We financed it $1. We financed it $1.50. We financed it $5. And so we kept growing it. We were making money for shareholders. And to your earlier question, so we ended up with 17 projects around the world, all through largely through Latin America, properties that other people had spent money on
Yeah.
and got on the wrong side of the cycle. So we
Yeah.
were now in this area with low silver prices. We could take advantage of that. And then, of course, as the price of silver started to go up in 2005 and 6 and 7, then you could look at something like Manantila Espejo, and we moved it along to a feasibility study with Pan American. We built the Perquitas mine. So that was a function of the rising silver price finally getting to a point where you could take these assets in the ground and monetize them.
Hmm. That's incredible. And at what point of that process did you really feel like, okay, this is working. This is a real business here. This is something that can be sustained. Like, starting early with a $2 million company, you never talked to a lawyer before, away you go. When did you kind of think, okay, we're going to have a self-sustaining business here? And what was the signs that you saw leading up to that?
When the silver price went up and the share price kind of got beyond $10 a share, that
Yeah.
we're able to finance. We knew from the work at Manantila Espejo, let's say, become a mine. And so we did develop that with Pan American. We eventually showed them our interest because it, wasn't large enough for two people to be involved in. And then when we were able to do a significant financing led by Bear Stearns and Deutsche Bank, we did our financing, I think, in 2007. We went out and raised over $100 million to be able to advance the Perquitas project. So then you knew that you had that velocity and behind you of institutional shareholders who are still shareholders in Silver Standard, right? And so, I mean, Silver Standard had the opportunity, as Pan American did, to go up to the $40, came back in 2008 with, unfortunately, the financial crash.
Hmm.
Silver Standard was able to grow, and we set up the foundation of the business with good quality underlying assets. And one of those assets, of course, which we picked up in 1999, was the Bruce Jack project through merging with New Hawk Minerals at that time.
At what stage did the company transition from attracting Rick Rule and the broker network of retail to these institutions like Bear Stearns and what have you? Like, was it merely the movement of silver price that they started to see, okay, the silver miners are making money, money's, starting to flow down through the ecosystem to the developers and the explorers? What do you think had to happen in hindsight to really bring in that interest from the more kind of generalist finance world?
It was at that time, we all benefited from the growth in China, right? It was China building out its infrastructure, and driving all the metal prices at that time, of which silver and gold were certainly beneficial. I mean, many of the majors, such as Teck, BHP, Rio, they really benefited from that build out in China. But as a consequence of that, we had these metal prices going up in 2005 and 2006. And it was the fact that our market caps went up because we had this very loyal shareholder base. I still had a
Mm,
large retail following, and they would hold on, right? And they would continue to buy more. So as a consequence of that, uh, when people would come to Vancouver, particularly the banks would go talk to maybe the Pan Americans or the Techs, which were producing assets, they realized our market cap was significant. We were, getting close to $1 billion. And
yeah.
as you know, that if you're an investment banker, you raise money for individuals and you make your commissions. And so we made that transition. And that was also a time when Rick said, we don't fund at $10. We fund lower down, and so good luck. And we went on and continued to have a good loyal following, but
Yeah.
made that transition around that 2005 2006 period. And then Silver Standard has continued to do well, or SSR
Yeah.
mining as it is now, because of the underlying assets that we put into it. It's all about the geology and the quality of the underlying assets.
So let me take a step back to that, to the assets. So you, Rick, Ross, all had this intuition. I'm guessing this is kind of in the early to mid 90s that it was time to go buy these sort of call options on silver, right? These out of the money silver assets.
Right.
What was going on in the world that made you, because there's the day you kind of intonated that like there were people that were on the wrong side of that trade, bought them at the top, had to exit them at a bottom. There's people that have tried this strategy and end up holding something out of the money for years or sometimes, decade plus. What intuition did you have that like now is the right time to be buying these out of the money silver assets? And then again, later for Ross, copper assets, he just kind of replicated that strategy.
Right. And when you have to think, we started this in 93, right? So
Hmm.
the fact that we finally saw share price appreciation significantly in 2003 and four, it meant it was a decade. So it was basically, I think Jim Blanchard, who, has been a silver bull all his life. And it was he and Rick and, investors at the time, Adrian Day was involved, that really looked and said, we'll take a long-term strategy, because I needed the holding costs. It wasn't just a one-up refinancing. We're going to have to continue to finance, but allowed me to put this large inventory. We had over almost 1 billion ounces of silver in the ground between what we bought and the discoveries. We went down and we hired a couple of prospectors to go work for us in Mexico.
Hmm.
And from there, we were able to come up with a number of discoveries. One of them, we come up with almost 700 million ounces of silver on. So we grew this inventory. And so that's what people bought into. There was, hundreds of millions of ounces of silver, up to 1 billion ounces of silver in inventory, that those who believed long-term in silver price going back to $50 an ounce could be invested in. So it seemed like it was overnight at the time, but when we were buying in 93, we were expecting by 95, 96. But, Warren Buffett get in, the silver price get up to $5, came back down to the four, and we just kind of
Yeah.
suffered through. There was the tech bubble, which was all very challenging for us in 1999. We were able to still finance through it. And then coming into that 2002, 2003, four, we start to see the silver price go above $5. And we're able to finance at that time. One of the interesting things that I was able to do is we ended up doing a financing, and we had $20 million in the bank, I guess about that. And I went to our board and said, listen, we're a silver company. We're not spending all this money. I'd like to take $10 million and go buy 2 million ounces of silver and hold it physically. And we were able
Hmm.
to do that. And we went in and bought the silver. We had to be very careful because when you're buying actual physical silver, you can, affect the price if you're going to buy it and take delivery. So we bought 2 million ounces at $10, and our shareholders like that
Yeah,
strategy.
yeah.
And eventually we sold it when silver got up to $20, and we used that to help finance ourselves. So we had great appreciation in the silver price. And so by being committed to the metal, which we often talk about, there's often the investor cohort will say, if you're a gold company, why don't you own your gold and silver? So we did that. And that
Yeah.
again brought in a certain investment who liked what we did. And then as our projects advanced, we kind of had a built-in financing mechanism where we'd seen our silver go up almost 4 times in value and minimize dilution for shareholders.
Where do you think we are in that cycle today? Where do you think um, investors should be thinking about? Is there appeal to buying out of the money assets today? Have silver and gold prices moved enough that maybe it's a little late for that, and you want to be focusing on more advanced, sort of established in the money assets? Where do you think we sit right now in that, given your experience kind of going through this more than once?
I would think a little more to your latter part of your conversation. With something like Dakota Gold with its IA with cash flow, which is similar to PEA, we're at that part of the Lassonde curve where we're going to start to develop and continue to create good value. And so we have a certain investing public within it. But if you look at current investors, I think they're investing in their producers, right? Because you're getting that
Yes.
immediately. If you think now with gold at 3,300 and it's going to $4,000, it's still going to take a long time for juniors who are working to unlock that value out of the ground with the permitting process. And insofar as we have politicians speaking to the fact they want to advance those going forward, you still have to work within the statutory regulatory framework until that's changed around. So if you want exposure to gold right now, then you may go and buy the Agnico Eagles or the Wheaton Precious Metals or any of the other royalty or gold producing companies are out there. And
Hmm.
I think that's why we're seeing them trade at good premiums, because that capital will say, we want to go and get immediacy of exposure to the gold price going up. And you're not getting the leverage that you used to, with a gold exploration company, unless you have a unique one. If you look within the Lundin
Yeah.
portfolio, they've had some great successes because they've been doing this a long term, right? There have been many of this a long term, but they've had good hits, and the market knows they have the capacity to be able to advance these going forward. But if you're kind of a single asset company with opportunities in the Timmins camp, or maybe here in Canada or in Australia, and you still need risk capital, it's still difficult to compete for that right now because the majors are taking, as people can see, they're making really good returns by investing in the majors at this point in time and getting that immediacy
Yeah.
leverage to the gold price.
Yeah, but I kind of think it's sooner than we might think, right? Because we've seen that money move from, of course, the Agnicos of the world down to the sort of mid-tier gold companies.
Right.
And, I was at a site visit last week to a company called Heliostar who bought all of it's like kind of the deal of a lifetime. They bought all of Argonaut's Mexican gold assets
Right.
for I think $10 million. And in
Mm-hmm.
the 6 months they've owned them, they've done something like $20 million of free cash flow out of those assets. And it's obviously a factor of gold going up by, 50, 60% in that time, but
Mm-hmm.
it's money's starting to pull into those sort
Right.
of, I don't know the right term, junior producers, if we might
Right.
call them that as
Yeah.
well.
Mm-hmm.
And so where does Dakota kind of sit in this sort of stack of assets? And can we talk about Dakota Gold and what you're building there for people that have never heard of that before and have no context on it?
Right. So, being an exploration geologist, you're always looking for areas where you can go and find assets that other people have spent money on, and you can leverage that. And that's what we did with Silver Standard and buying those, 17 projects around the world
Yeah.
that had multi-millions of dollars spent on it. So, 5 years ago, I was shown a long section by then Jerry Aberley, who was running a company in Dakota called Dakota Territories, and John Odd, who have been out looking for opportunities. And the long section showed that you had the historic Homestake mine, which had produced 40 million ounces of gold over 120 years. And then you had the area to the north, which was really underexplored. And when the Homestake mine was found in 1876 and started mining in 1878, as you would know from kind of the old timers, they just started mining where they had gold at surface and followed it down.
Mm-hmm.
And Randolph Hearst at the time came in and bought all the property around the area, said it all tied up, so no one else could do much work. To the north of the old Homestake mine was undercover. There was trees and forest over it. And to the area of the south they worked, it was kind of exposed outcrop. So over the 100 years, people just went down. Homestake had done some regional exploration work on it in the late 1990s. They put some holes to the north and found what they called the North Drift Discovery. They hit economic mineralization down 5,000 or 6,000 feet, a few scattered drill holes. They hit material running, maybe, 0.15, 0.2 ounces of gold over, 5 to 10 feet. Their cutoff grade at the time was 0.2 ounces or 7 grams. So
Okay.
this didn't make their cutoff grade. So they stopped drilling. So here we are, a few years ago, gold price is over $2,000 an ounce. You have mineralization, which my experience working underground, both at Hemlo and working at Lamaque, is you want 3 grams is kind of your cutoff grade. If you got 3 grams, you can meet your operating costs, maybe pay some capital back. So suddenly I looked and said, there's a few scattered holes here next to 40 million ounces, and no one's explored it since 1996. Let's take a look. So we
Mm-hmm.
came in and we started drilling in what we call our Maitland project. We've had a number of high-grade intersections at our JB zone. We've hit like 40 drill holes, or we have 40 intersections at our drill holes, which average 10 grams over 4 meters. So that's much better than Hemlo. So I'm going, okay, that looks really good. But we need to be able to ultimately drill it in detail and get underground on it, as we did up at Brucejack. At the same time, we're working here, the Richmond Hill project, which was also a project that Barrick owned, was available. I went and looked at the data. There were 900 historic drill holes, and you could see the pattern of oxide material over sulfide material. And I just said, it looks like there's a multi-million ounce potential here. We picked it up. We put in another 150 drill holes. And earlier this year, we announced our updated resource, which was basically 3.6 million ounces of measured and indicated gold and another 2.6 of inferred in this mineralized material, which is identical to the material which is being mined at the Wharf mine. And the Wharf is in these tertiary younger rocks, and it's been mining since basically 1982, 1983. So for over 40
And
years.
where is that geographically respect to
2
your
miles south of
project?
us,
Okay.
2 miles
Yeah.
south of Richmond Hill. So you've got a mine 2 miles away with an open pit, mining the same kind of rocks, and has produced over 4 million ounces of gold. So we've gone and found this material. So we decided, well, let's do an economic analysis of it. So we just completed what's called an initial cash flow, initial assessment with cash flow. And we published that on Tuesday. And we showed that at $2,350 gold, that our measured and indicated resource, we'd mine about 2.6 million ounces and would have a discounted net present value of $1.6 billion against our market cap now of around 400. And if you looked at the measured and indicated and inferred, more in a higher grade. So suddenly that said to me that, yes, this mineralization has an opportunity to be a mine. And so we're now at that phase of the Lassonde curve where we've got a defined resource. We now have to advance it and continue to de-risk it by doing additional drilling, additional metallurgical work, but doing all the baseline work that you need in order to advance a mine in production. And over my career between Hemlo, working the Tarco mine, working Menando Espejo, doing Perquitas, and building the Brucejack mine, I know all the steps that you need to do along that to take a discovery, as we did. I was the first employee and only employee at Pretium, and 5 years later, we had 2,000 people working there building a mine. And so I know the systems that you need to be able to go along.
Was it five? Was it? Did you say 5,000 people or
2,000
2,000 people? Wow.
during
Okay. Still.
construction, right? Yeah. It was at 5,000 feet up in the mountains around the glacier, which is very different than we are in South Dakota. which is
I was
where
gonna ask that, right? Because Pretium had to build like a moving road on a glacier, if I remember correctly, right? You had to
correct,
account for the movement of like, so it's a bit of an engineering marvel. Like, does this
correct.
seem pretty simple down in South Dakota by comparison, or what parallels can you draw between these two? Because I mean, you won just about every mining award known to man based on the work done on Pretium there, and it was very celebrated here in BC because of the challenges of that and the obviously inevitable success. But how does that compare to what you're doing now in Dakota or in South Dakota rather?
Right. I would almost say the antithesis. We may be at 5,000 feet, but we're in an established mining camp with all the infrastructure. You have power
Hmm.
lines, roads. Our office, it's 50-minute drive from Ross out to either our Maitland project or to Richmond Hill. You have, talent around because you have an operating mine. You have the associated mining infrastructure that you need, and because of the permitters and the regulators, they're familiar with what a mine looks like. So being on private land, there's a very defined process that you can go through to advance this along the permitting aspect. So, uh, I started Brucejack and Pretium when I was 55, and so now that I'm 70, having something that's you can fly in, you can drive up to it. There's a nice historic bar in Deadwood where Wild Bill Hillcock,
Yeah,
used to
yeah.
be. It's so much more pleasant, but that's the aspect of location. We think about that in real estate. It's important in mining as well. You want to have security of title, which you would have in South Dakota. You want to have the experience of being able to go permitting, and you want an environment of individuals who live in the communities who see the benefit of mining, who can be your allies in ensuring that you can advance the project, but you do it as good stewards of the land with the environmental sensitivities that we need nowadays. And it's a great way for me to perhaps be the end of my career, having done many, but that's what attracted me to it. It has the same kind of high grade nature that we did up at Brucejack that we see
Hmm.
at the Maitland project, but we have this at surface cash flow generating opportunity at Richmond Hill, which has somewhere between an 18 and 28-year mine life. Long life mine, secure location, can generate the kind of cash flow that you can then use to do the exploration on the 48,000 acres of land that we own in this historic district that hasn't been explored for 30 years.
I'd love you to try to articulate, you talked about the same high grade nature. I'd love you to try to articulate for non-geologists or the amateur geologists that are listening to this, when you first start looking at a Brucejack or what you're doing in South Dakota, what is it that stood out for you geologically, right? When you're looking maybe at drilling or maps or what have you, what was it that you kind of first cottoned on to that like, oh, I need to take a harder look at this? What leaps out at that earlier stage to you as a, professional experienced geologist?
Right. So if we look at Brucejack and the Snowfield project, when we bought New Hawk or merged with them back
Mhm.
in 1999, they had the Brucejack asset, which was largely silver. It had about 20 million ounces of silver, and there was some gold in it. But it was in a large color anomaly. So, flying through British Columbia, often you see these, right? So you have all these gray rocks, and then there's this orange rock, right, in large. And you say, it's a hydrothermal system. There must be something going on here. Let's look at it. So up at the Snowfield project, there had been a drill hole that New Hawk had drilled, back in the 80s. They had it back in 1985, and that drill hole hit like 300 feet of zero point 0.1 ounces per ton. Thought it was interesting. So I flew up there with our geologist, and the geologist had worked at me at Hemlo at the time. And we looked at the rocks and we go, the Hemlo is Precambrian, but this alteration reminds me of the West Zone at Hemlo. So we start drilling off Snowfield, and we come up with 1 billion tons of about a gram of gold with low grade. Well, as you kept flying to Snowfield, we flew over Brucejack, and I said, well, let's put a drill in here. So we put a drill in. We started drilling at 200-meter centers, and I think it was hole number uh, 12. We hit 16 kilograms of gold over like half a meter, like massive gold
Yeah, yeah.
piece of drill core. And I looked at that and said, that's unique because when I was doing my undergrad, I did some work in geochemistry. And when you looked at this piece of gold drill core, often when you have an epithermal deposit, you'll have lots of alteration around the high grade gold, right? You'll have your underlying rock could have calcification in it,
Hmm.
cerussitization, a variety of things like that. This rock was clean. One, it was silicified, which meant, first to me, mining's going to be easy because you can actually drill and blast and won't have a lot of dilution. Now, it means your drilling costs are higher, but you can manage your dilution. That was the first thing that struck me. The second was this high grade has no alteration salvages, which meant it had to devolve out of solutions very quickly, which meant if you've got 1.6, 16 kilos, that's 1.6% gold in it, they had to be super saturated. And so as we did more drilling, we would have these random hits. And when Silver Standard, when I'd retired, they decided they wanted to sell this asset. I had suggested we shouldn't until we understood it more. They said they're going to sell it. I said, well, I'll go buy it. I created a company to buy it. But in that drilling, when I looked at all the drill hole data, we had these very high grade outliers of massive gold, which meant they were random. It was going to be very difficult to chase them. But when you looked at all the underlying drill hole assays, when I looked at all the assays over 3 grams, I had 6 pages of assays. And I knew from my experience underground, the 3 gram material, which seems to be ubiquitous and everywhere, will pay for the operating costs and capital, and the high grade will pay for the profit. The issue will be how do you determine with this nuggety effect what that high grade is going to be? And
Yeah.
so that allowed me to have the conviction saying, I have underground experience. I have the conviction on it. And I had to go out and basically raise $450 million to buy it on a thesis of 2 and 3 pieces of drill core. And it was able to do that with people who looked at me, who knew what I did with Silver Standard. And I said, it's either there or it's not. But I can't believe we can devolve this much gold randomly without occurring. And that started the whole dialogue around Pretium. How do you deal with the high grade? People want you to follow the veins. And I was like, no, you need to mine at bulk, which is what we did at Hemlo. And that's how you had to look at it. And it was that underground experience and looking at the detailed mill work and assay work that I could formulate that opinion.
Okay. Wow. Um, and and what are you seeing today in South Dakota that gets you excited
Right.
similarly?
And so when you look at the resource which we put out today, and now we've been able to put, economics around it, the lower grade material at Richmond Hill, which is running around a half a gram, 0.5, 0.55 grams, is ubiquitous. It occurs everywhere. If you look at the drill hole we announced on June the 18th with doing some of our infill metallurgical work, 60 meters, of 1.9 grams of gold. So 3 to 4 times higher than the average. But when you look at the 900 historical holes and the holes we've drilled, you kind of have this blanket of mineralization at surface. Our strip, is kind of zero point 0.4 to zero point 0.6. So very low grade strip, which means you don't have to load a lot of material. It's right at surface. You can start mining it. And that's what I like. So you've got a very defined at surface resource that you can mine, be able to put on a pad, and then metallurgically treat it in order to be able to cover the gold, which shows that we're going to have all-in sustaining costs of around what we think will be about $1,050 per ounce. And so, again, from my experience working with open pit mineralization at the Tarkwa mine in West Africa, and then some of the work we did at Perquitas, I've worked with open pits, and that's what I like about here. The ubiquitous, continuous nature of mineralization. So you had these tertiary solutions come up, go into the overlying rock, and just spread and permeate throughout. And it makes mining easy because you're able to come in and follow your mining pattern. And then it's basically taking this surface area, putting it on a pad, being able to extract the gold, and then ultimately return the land again back to kind of how you found it by infilling some of the pits and being able to do it. So a really environmentally sound project, very different than Bruce Jack, but the fact it's lower grade, but it occurs everywhere.
You mentioned uh, just a few minutes ago that permitting was sort of front and center in your mind as part of one of the criteria when choosing this project. You've now operated in the United States under Democratic administration and now a Republican administration. Things are changing in a lot of ways in the United States right now. Has that had an impact on you guys? What has that made things easier or harder with the project with respect to permitting or advancing?
I would say it comes from the fact that it's attitudinal, that people see that this administration wants to be able to move forward with respect to mineral development. Gold is now defined as a critical element or metal, which it should be because it's used in our everyday lives, right? People, often forget that a cell phone has 70 elements in it. Gold's one of the key components of that because,
Hmm.
it doesn't spark when you put a current on it, so it can be used in the capacitors within it. But looking back at, specifically Dakota Gold, one of the reasons that I get involved is that our Maitland project and the Richmond Hill project are on private land,
Yeah.
which means, therefore, in South Dakota, they come under the purvey of Lawrence County, where we currently live and where our mine operates or would operate, and where the current existing wharf mine operates. And so you deal with conditional local permits. And because wharf has been operating for so long, then the regulators are familiar with the mining in that regard. And the same with Richmond Hill. And you deal with the state permits. And so you don't have federal jurisdiction involved here. So insofar as changes elsewhere can be helpful for other companies working perhaps on BLM land. In our case, when I first decided to get involved in here, one of my main reasons, we're in private land. There's a very prescribed way to advance a project through the
Hmm.
permitting phase. You have experience with it here locally with the Wharf mine and historically what the Homestake mine had done. So that was one of the key drivers that allowed me to make my investment in it and be focused on advancing this project because of that fact is that it's more prescriptive here and you've got an ecosystem here that understands mining and is supportive of mining.
And this is the patented versus unpatented land, right? As it's
That is
traditionally referred to in the
right.
US. So it
Yeah,
is patented is private. Do I have that
private
right? Yeah, okay.
to be
And
private
then often unpatented falls under the Bureau of Land Management, which can, I
or
think,
service. Right.
depending on the office you're dealing with and the state you're in, there can be some regional differences, but it can be, I don't know, I'll be diplomatic and say a arduous process of getting permits at times.
Right. It can take some while in that regard. And so therefore, again, in order to create value for shareholders, you're right, you can have great geology, but you need to ensure it's in the right jurisdiction and it has the appropriate framework around it to be able to advance it to cash flow, because that's ultimately, where you're able to make the
Yeah.
best value for your shareholders is in a cash flow situation.
So thinking about though, I want to kind of throw some things at you that have kind of happened recently, right? So one few months ago, you have Trump tweeting out that, any project that needs to invest $1 billion, we're going to fast track it through this new regime. I don't know the CapEx requirements, but I assume they're probably in that range or getting near to
No,
it.
we have, because we're a heap leach, we've got a fairly what I think would be low capital because of the plant facility existing infrastructure, which is already
Hmm.
here. So our capital cost is projected at about $331 million
Okay.
and a 53 million contingency. So you're looking at total capital of around $384 million. So we're well under that benchmark. But the nice thing is that Orion, who are our major shareholders, who helped
Yeah.
finance the Brucejack project in production, have indicated they'll provide up to $300 million of financing for us currently in order to advance our projects here. So we've
Ah,
already
there you
got line
go.
of sight of
Yeah,
the
yeah.
capital that we need to be able to do. So insofar as I think that's great for the administration to be able to support that, it certainly isn't something that would affect us.
And then you also see, so this came out today. I'm going to read this headline. Pentagon to become the largest shareholder in rare earth minerals MP materials. Right now, shares have gone up by, or price has gone up by 50%. They just bought $400 million of stock in MP materials. So you've now got US, broadly say, institutions buying stakes in mines that they consider critical. Is this a conversation you're having with legislators at the state level, at the federal level, these sort of maybe opening opportunities to bring in large amounts of capital from I don't know what you would even call it, but political bodies or federal bodies. Is this a conversation you guys are having right now?
I would say not, because of the fact that we've got a very defined project, and
Yeah,
because we've got access to, risk capital already, and it's sophisticated risk capital that understands, often depending upon whether you bring a government process into it, it may take longer for education. One of
yeah,
the key components when you talked about the exposure I have in the mining industry is about education. We need more STEM education, science, technology, engineering, math in school systems, so that statutory decision makers and politicians, rather than just looking saying this is what we need to do to support critical minerals. When you think about it, years ago, the United States had large critical mineral stockpiles of many
yep.
elements, sold them all down, right? Why do we need them? And now here we are back because of the fact that something like rare earths, which we know occur everywhere, but processing of them is largely restricted to going on in China because it's a very complex project. So we need to be able to import those back here into Canada and the United States and North America. So we have access to these minerals. But I think for now, because we have such a well-defined heap leach operation, which occur in Nevada and everyone knows about it, we'll continue with the financing structure that we've been able to put into place and that we have going on with Orion. Now, up at Richmond Hill, we did announce we've got some rare earths there that we'd look at, but that's not something we're going to focus on right now. But once we continue to
Yeah.
evolve our gold opportunity, it's something that we could look at down the road because there's some porphyries there which have a certain amount of enrichment in them.
Well, let's kind of talk a bit more about education because I think maybe there's two components of education, right? There's the public education, and I guess just the awareness of the need for minerals and metals and the process of extracting those from the ground. And then there's the education of the sort of mining professionals and workforce, right? And I would
Right.
say all of those have suffered significantly, or maybe lacked significantly in some way over the last couple of decades. But something I have noticed a lot over the last year is an awareness of the generalist investor and the generalist financial commentator on the need for things like uranium and critical minerals, to a lesser degree, copper, things. It's starting to come up in conversation with people. And that's quite unique for me in my career, seeing this. I listen to other podcasts of sort of tech commentators and whatnot, and to hear them start talking about nuclear energy and and uranium supply was a bit kind of shocking at first because it had been so far off the radar of the generalist investor for, I don't know, the last 10 years at least. So is that something you're seeing? Is that something you think will grow? Is that something you think the industry needs to take a bigger hand in developing? What's your view on that? Because I know education has been important to you and something you've focused on throughout your career.
Right. And I would totally agree with that assessment. We're seeing more conversation around it. It's interesting here down at this conference that people are more educated and come up and ask more sophisticated questions because Rick spends a lot of time educating individuals. What are the
Hmm.
right questions to be able to ask? And that's what we need to translate as an industry in investing and make sure that we get STEM education into our school systems so that people understand, when people are using, this for social media, it's got 70 elements in it. We only mine, we mine most of them here in North America. There's a rare earth project in Mountain Pass, but I think its materials are processed elsewhere. So if we want these assets here in the country, particularly as you look at the AI, which is going to use a lot of metal, right? It needs power lines for electricity. You need the large server farms. You need to be able to provide all the metals which go into them. So as we make people more aware of these requirements, and particularly those who have political decisions around it, I think it's just really good and positive, as you say. You see those conversations going on. Whereas 20 years ago, if I said to people in my family I'm in mining, they would think, "Oh gosh." Whereas now they understand it's
Yeah.
necessary. It's necessary in their everyday lives, and I think that's what's important for us as an industry. And the mining associations, both in the United States and in Canada, have to lean into that. We have politicians now speaking about this commodities, which I've not heard in my career. So let's ensure that we continue to evolve
Yeah.
it so we all become stewards in making these decisions about how we utilize the resources in the ground to the benefit of our societies here in North America.
It's interesting, there is this shift happening that I'm not sure a lot of people are aware of. So, do you know the venture capital firm Andreessen Horowitz? Have you ever come across them before?
Heard of the name, but just
Yeah, they're one of the big sort of massive tech ventures VC funds. I don't know, they have tens of billions of dollars under management, first investor and all these sort of tech unicorns, etc. They just released, I don't know, 2 or 3 weeks ago, a white paper thought piece called It's Time to Mine. It's probably a 10-page article about how America needs to redevelop its mining industry, redevelop its mining workforce, start bringing tech into this industry. Obviously, that's their angle. Start securing these critical minerals. And it's just really fascinating to me that a tech investment firm that could not have cared less about minerals or mining 5 years ago, probably 18 months ago, is now writing these sort of thought pieces. And I think, there are obviously a lot of very smart people whose job is to be ahead of the curve, right? In tech, are starting to look at this space and calling for vertically integrated miners, bigger miners, tech-enabled miners. It's just a very interesting thing that's starting to happen right now that I don't really know where I'm going with this, but I think it's kind of worth noting that that sort of huge amount of capital is waking up to this.
right. And I made a presentation on mining exploration to production at the Society of Mining Engineers in New York a few years ago. Was asked to go and present at Stanford,
Yeah.
which I did, and I got invited back this year. It was just out there for a conference in May put on by Dr. Jeff Kars with their Mineral X aspect in their Department of
Yeah.
Geology, and well attended conference by a lot of high tech individuals from Silicon Valley coming up and realizing this aspect. Or you had perhaps other larger groups coming in and realizing they need to be better involved in the supply chain. If you look at Tesla share price versus BHP share price, here's a company that's going to provide all the materials, perhaps up to, EVs. And so it was great to see, as a leading institution like Stanford that you think is now supporting mining because they understand the
Yeah.
importance that it has. That even people would say, if you don't eat it, you mine it. But even nowadays with food security, we need potash to be able to grow it. So we need mining impacts our everyday life. So the more that people are knowledgeable about it, but as you say, when you start to get that sophisticated money understanding that to have AI, we need large server farms which have copper, which are going to have plastics within them. And we need to make sure we mine all of that in an environmentally sensitive way that can provide what we're going to need to have this AI world. And the one thing you can see with Stanford, because they have a lot of new young professionals coming in globally, how can we take all this plethora of data that is held by mining companies around the world, which is proprietary, and get it so it's shared? You get open source
Mm.
sharing. And similarly what Rob McEwen did years ago with Goldcorp, we put the Goldcorp challenge, right? Here's all my data, come and see if you can find a mine. And people came in, found additional, I think, to the Red Lake camp. So there's lots of data that we collected the way I did on maps and cross sections. Now we can get that integrated through AI. And how can AI look at all this data and come up and help us find mines? Because as we often say in this industry, the best place to find a new mine is in the head frame of an old mine. I
Yeah.
think the best place to find it is taking and integrating historical data with new price points and looking at that. And I think there's a real opportunity for AI. And that's where we need more computer scientists in this business, as well as mining engineers, being able to look at data.
It's really interesting, and something I've been thinking about a lot is that, like, what is a mining company going to look like in 10 or 20 years from now, and how different will that be? And, something that has been, I've kind of lived through a period of my whole life of things being broken into their smallest conceivable parts, right? So,
Right.
I mean, in the 70s and 80s, you used to have conglomerates, right? Whether it's Enron or GE or what have you. And you used to get a conglomerate premium for owning your own supply chain and diversification and blah, blah, blah. These are the benefits of that. That has completely shifted over my life. And you've seen, mining companies break into their smallest parts. You've seen oil and gas companies do the same, the conglomerates split apart. And now that made a lot of sense in a world of globalization and really efficient supply chains. Obviously, things have shifted a little bit these days, and there's more nationalism. Maybe there's less globalization. Do you think we're going to start to see mining companies own their supply chains, whether it's right down from the juniors to the production, to the transportation systems, to the refining, to creating that end product? Do you think there will be a shift? And do you think, the reason I think about this in an AI environment is because you will want to control that data along that entire supply chain. I kind of have this soft thesis that that's the way we're going to go, that the pendulum's going to swing back to the conglomerate model versus, or the fully integrated model, I should say, versus the siloed model. Do you have any opinion on that, or do you think I'm crazy?
No, no, but I wouldn't stop at the mining company. I think it's going to be the end user. It
Yeah,
could be something like a Tesla or maybe a Toyota, which ultimately needs entire supply chain, as you point out. It needs the miners, but it also has to create the mining vehicles that can go in and do the mining
yeah,
if you've got a large open pit copper mine. But I think there's an opportunity for, we're already seeing to a certain extent that mining companies, the large majors, are always investing in the juniors, thinking they're going to be able to bring the product up. But I don't see a mining company ultimately going on and owning a equipment manufacturer that's going to
yeah.
feed into their mining fleet. But you may see
But they
mining
might own
companies.
railways, or they might own ports, or they might, I mean, Glencore, like the traders have always been good at
The
that side of
traders have been
things.
good at that. And the great thing about Glencore, it has a lot of the refineries around the world because it's going to be challenging to permit perhaps new refineries. And so I think the miners are already so diverse as they are in trying to manage their portfolio or platform in developing these large mines. The question is, how can they use AI to mine the data that they have in their data areas to make them more efficient, and be able to utilize it with something like radio controlled trucks. There's been data shown out there. If you look at the work that's going on in Australia, where you were from, with some of the iron ore, just anecdotal data would speak to the fact that if you're doing in pit drilling and you have it controlled by AI, that drill will drill every 50 centimeters and put the hole in. If if it's operated by an individual, maybe it's 49 centimeters, maybe it's 48, and you
Mm.
don't get that same consistency. So there's a lot of areas where I think AI can be utilized in mining operators. And so going forward, it may well be we've got computer scientists sitting in a head office in Denver who are controlling remote mining going on in some foreign jurisdiction because everything underground is going to be wireless, and they're going to be able to make controls at the head frame. So you can do that safely, because that's something we want to do, is make sure we got safety mining going in. But maybe that becomes part of our next future, which is we need to really expand the individuals who are going to be involved in mining, because they're going to have those kind of computer skill sets that we don't have right now.
Well, we're running up on time, Bob. I know you got to get down to the conference, and that actually leads me to my last question, which is where do these people come from, right? I mean, where is that 30-year-old that's building the next silver standard mining, right? I mean, you mentioned you were in your 70s, Rick Rule's in his 70s, Ross Beattie's in his 70s, Robert Friedland's in his 70s, Eric Sprott, I think, is around there. The well-known people are are now kind of in the twilight of their career, and there really is quite a huge gap, right? There aren't a lot of people in their 50s and their 40s that I think could achieve the level of success that you had in your 40s, for example. There does, to me, appear to be a real skill gap. They do exist, but there aren't a lot of them, I guess is what I would say.
Right. And because I think part of the challenge is when I was first doing it, you could go do a prospectus financing and it was a few pages.
Yeah,
Now with all the disclosure, so the cost of being able to do it, and you need to have that understanding. You just can't pop a geologist in without understanding the legal. So you need a
yeah,
team
yeah.
around you. So I think it's that leadership. So people have to come out who are good, solid leaders. I mean, Vancouver's a great area, even yourself, right? If you're doing a service here because you're letting individuals like myself try and pass along some of the expertise and what occurred for myself, whether it's Rick or with Ross. And we have to find those individuals who are engaging and realizing this is not a sunset industry. This is a sunrise industry. And we want to control how it's going to sunlight as we find new sources of mineral here in North America. So it's about someone who can bring in a wide variety of interests, which you now need to be able to educate people, but be able to come in and have that leadership to understand this is necessary. We need to do it the right way. And we're hoping that our universities are bringing those individuals in. And I say I was really surprised and pleased with the cohort of young industry professionals that I saw at Stanford, a month ago, all over the world, seeing mining as a future career. That wasn't something you might see 10 or 15
Yeah.
years ago. So they're starting to come up, and we just need to be here to help support them with that phase and with their development to make sure they do it the right way and are able to achieve a success.
I think you're right. And one of my kind of pet theories is that what AI is going to do is it's going to put all the computer programmers that were building food delivery apps out of work because one guy who, uses AI well can do the work of 20 of them. And all those very intelligent, very educated, very driven people are going to have to go somewhere else to find a return on their education. And my thought is that's going to be into hard industries, things like mining, things like oil and gas, things like
Right.
manufacturing. And,
Mm-hmm.
that's the area that is, in my view, most stagnated over my lifetime, right? Things have not changed that much in the physical world since the 70s, right? If you were born in the early 1900s, from the beginning of your life, there was no flying. And at the end of your life, they put a man on the moon. Like the
Right.
physical world changed so much. But since that time, it's been basically the same. We're going backwards. There's no Concorde anymore. It takes longer to fly to Europe than it used to from Canada. So I
Right.
hope that a lot of that money and talent gets poured into these sort of hard industries, and I'm kind of betting on that, and I hope that's what happens.
I'm with you on that. It's been a great pleasure.
Thank you so much for your time today, Bob.
All right. Be well. Take care. Thank you.